Yo, what's up, YouTube? Welcome back to another video. Today, we got something a little bit interesting. We're talking about some fundamental, I guess, sort of technical analysis laws or price action laws to follow. And when I say it's a law, it doesn't necessarily mean something that will happen 100% of the time or that is 100% true. But I basically just mean these things are pretty consistent rules that you can start basing your trading off of, your technical analysis off of, your strategy off of, and start, yeah, you can implement these into really any strategy probably. These are just some basic laws of trading, price action that I think will really benefit and help some of you guys. But with that being said, as always, do hit that subscribe button down below and do smash that like button. Please, it does help the channel out a lot. But we're growing. We're almost at 1.1 thousand subscribers, and I can't thank you guys enough. That's a pretty big number for me, which is crazy. So thank you again to everyone that subscribed. And yeah, let's hop over to the chart and see what we're working with. So here's the chart for the British pound, US dollar. I just chose this chart randomly. This moves pretty clean, and I wanted to highlight some of these things. Now, none of these include moving averages, so I'm going to turn these off. And by the way, if you want to know how to get these daily moving averages, I just posted a video about that recently, so go check that out. I'll put a little thing somewhere where you can click. But anyways, let's continue. So the first thing I really want to talk about is with market structure. Market structure is huge, right? I used to underestimate it. Now it's something, and I think a lot of people come to realize this. Market structure is really important, right? There's a reason it exists. So here we are on the 4-hour chart. So market structure, I did a whole video. If you don't know what market structure is, again, I'll put it somewhere on the screen where you can click. But for the sake of this video, let's hope you know what market structure is. It's basically just the overall structure the market creates, And so one thing I want to highlight here on the 4-hour, now I don't know if these probably do apply on the 15-minute, but definitely the 30-minute and the hourly, these things should apply and up. But let's look at the 4-hour. So essentially, when price is in a downtrend, when price is going down here, okay, here we go. So here we are in a downtrend, right? When price is in a downtrend, this is sort of the last major structure it created, right? As you can see, it tapped it to the pip basically and came back down. So how do we make a trading decision off of this? Well, if you have a good bias, basically I view this as maybe a lower probability trade, but if it gets up to this point, it means it's a bit more bullish, right? Basically, these are some interesting things. You should probably take notes, right? If price just got to here and never tapped this region, if price was right here or right here or right here, and then just continued on down, it would just be, okay, sentiment and price action is pointing down for whatever reason. It might be because the US dollar is strong, the British pound is weak, or a combination of the two, right? But if it does come up and if it does tap this region, that shows me that it's a bit more bullish, right? The buyers are a bit more heavy, right? And you always want to be in the direction of the path of least resistance, right? Let's say you're sort of like a snake, right? Sort of like a snake slithering around the desert, and if you're the snake, right? You're the big rattlesnake, with all the poison and scary and whatever, and you want to get across the desert. You want to get across the desert, and there's a pathway with a lot of rocks. And it's going to be really hard to get through, and that basically represents going against the majority of volume in the market, going against the flows, right? Or there's the other side, which is nice and sandy. You can just slither through and you'll be all right, and it's really easy, right? So you always want to be on the path of least resistance, whatever time frame that is. You know, if it's on the daily, you know, it might be different than the 1 hour chart, but you know, it depends, you know, obviously how you trade, but whatever time frame you're looking at, you want to be on the path of least resistance. You know, like I said, these principles apply on the 1 hour, 4 hour, daily, I think even the 30 minute. Before under the 30 minute, it gets a little bit choppy. But so if it gets up to here, it's a bit more bullish, right? And so so it's all about, this part's just about market structure here. If it does not break this low here, actually, let me just do this. So if it does not break this low, and as you can tell, it just barely got to it, but it didn't break, that indicates, again, it's a bit more bullish. So you could take a trade base off this if you're, you know, however you trade. If you're just technicals, find a technical entry. You know, maybe you got in on this right here and your stop was right here, you know, and your target's up here. You know, however it is you trade, or maybe you have a fundamental, you know, bias, like how I trade is fundamental analysis and technicals. But essentially, price now is sort of in no man's land a little bit, right? It's a bit more bullish bias here because it's making higher highs and higher lows, which should always tell you the sentiment of the market until it breaks, right? There's a reason people say the trend is your friend, and that's what I'm trying to convey here. However, right now the trend is ranging, right? Didn't break this, but it didn't break this. The bias is slightly more bullish, but sort of neutral, right? And so that's what I want to convey to you guys when you see something like this. Basically, just by analyzing, did it break highs, did it break lows, you can get a very good gist of where price is likely to head. And as soon as we break this, well, you know, price should come up, right? Should come up at least probably to this level, at least probably to here, right? The next sort of resistance. And then we might get a pullback. Who knows? Maybe not. It's all about probability. Then we should get a move probably up to here, or up to here. But regardless, it's just about market structure. If price breaks right here, there's a very high chance it's going to move up. How far up? Depends. How fast? Depends. The way it's going to move up? I don't know. Ask the sky. Nobody knows. It's about probability, right? If the probability is even 51%, 55%, 60%, well, you know, that's something you can trade off of. But anyways, let's keep moving. So let me actually just go back in time. All right, so let's go here and talk about this. So we have this sort of zone, right? If price, and then price is making a higher high, higher low. And another law here, another little law I want to talk about is if you see price making a sort of a base, right? And not just bounce like this. If it was just like boom, that'd be a different story. But it formed sort of a base. If it forms a base and you can see price makes an aggressive move higher, that's a good indication the sentiment's probably flipped. All right, so not only do you have to look at market structure where, yeah, that did break. So now you could even say it's more bullish, but even if you didn't like draw this out, even if you didn't have this, right, just the sheer aggressiveness of this move should sort of flip your bias already to, okay, there's a reason this thing moved like that. The market moves, and if you don't keep track of fundamentals, that's why I say if you just want to trade technicals, these are some laws to keep in mind. If it moves that aggressively, usually there's a reason behind it. Usually there's a fundamental reason that flips the bias around. And if it moves that fast, for the most part, it's going to probably hold up. It's going to hold up. It's not going to shoot right back down unless very rarely, unless something changes and the fundamentals, that's why it's important to keep track of these things so you have a better context of what the price action you're looking at, right? But if it moves up aggressive, it should hold and it should probably continue in that direction, right? So by looking at this, you would say, okay, moved up aggressive, it's holding, we could expect a move probably at least up to there at some point. Okay, now you have an idea, right? You have some probabilities. Well, the probability that it's gonna break, the probability that's gonna break this low is less than the probability it's gonna get, up to here and then up to here. So the probability is higher, the risk reward's in your favor. Just to sort of highlight this, let's just say you did something like that, All right, hit the first target. And then at this point, you would say, okay, if this thing gets for sure below this level, then the sentiment is no longer, as bullish as I want. So there you go. Got a break, you'd be out of the trade. So it's all just about sentiment. And, for sure up to here, levels are really important, right? Now, I do use trend lines, I do use Fibonacci. Don't come at me like that. But levels are important, especially levels of structure. So these are some laws, I just wanted to mention. And then another one that I want to touch on is, I think some other people also talk about this. I've heard, I think his name's Raja, I think he sort of talks about this, is the fact that if there's a lot of consolidation in a certain area, usually it's going to be harder to break. And so you need to anticipate that. Like let's say in this example, if you thought it was going to head higher here, it did pretty well. But for the most part, if there's a struggle, like right here, for example, if price is choppy, for the most part, when price gets to that level again, it's going to chop around. And so knowing this stuff, right, let's just extend it. You can see it was pretty choppy in this area. So if price is choppy in a given area and price comes back to it, usually it's going to be choppy. So you need to prepare for that, right? If you're trading that area, move your stops pretty low, right, because it can chop around. Don't move your stop to break even too quick, or else it'll just come back and range and then go in your direction, right? But if you have something clear like this, if you have not so much consolidation, it should be able to get through that area fairly easily and fairly quickly. And if it doesn't, then that's also another sign, okay, something's a little weird here. The market doesn't want to move that direction, so you should be a little bit more cautious at that point. That maybe I should move my stops break even or take partials, or however you want to limit your risk there. But yeah, I don't want to make this video too long. I'm going to end it there, but I will probably be doing a part 2 to this video because there's some more stuff I want to talk about. I just don't want to make the video too long. So I hope you guys enjoyed. It was a bit rambly, but I think I got some good value in there. So if you enjoyed, give it a big thumbs up. That really, really helps growing the channel. And if you haven't already, please do subscribe down below. And yeah, let me know in the comments which sort of rule you found most useful, some new things you might have learned, some questions, video ideas, whatever it is. Let me know in the comments, and I'll see you guys in the next video.
I come from a town where most of the people are so close-minded. They go into school and they work in a job, but they don't even like it. I won't be put in a box. Nobody telling me what I should rock. Nobody telling me what I should